Welcome back, TTM Trades. I just wanted to record a quick video because I won't be here for the market close. I got to get ready to go out. So the market played out exactly how we said it would play out. In yesterday's video, we said we would get that push up to that 457 to 460 to 61 level. And if you look at today's high, was right around 460.29. And, we said we would get that rejection to continue that lower high, lower low pattern. We got that rejection with a major flush. And I mean, the market is just overall in this weird place right now. The unemployment numbers came out this morning, and I believe the jobs data came out this morning for November. Now, the reason I say the market is in a weird place is because the unemployment numbers came out, and it did way better than the target that they had, right? Which is showing that the unemployment market, right? There's more people getting gainfully employed, and the employment market is looking very healthy, right? Which normally, if you have a strong employment market, that's all the right reasons for the market to go higher. Strong labor market, profits are being made. Everybody's making money. Everyone's spending money. Long story short, right? But the market is in this weird place to that if there is a strong labor market, which normally relates to a strong economy, which normally relates to a strong stock market. Right now, a strong labor market means that the Fed Jerome Powell will cut back on their bond purchases a lot sooner. All right. And with them cutting back on their bond purchases a lot sooner and interest rates being raised due to such a strong labor market and a strong, quick recovery of the economy to help deal with inflation, that hurts the market in the long term, especially tech companies um, who normally borrows money to invest in their company to continuously grow it, right? And if you have higher interest rates, that affects them in future earnings that they have the potential to make. So this is where you're kind of seeing a selling of the market, and our technical patterns play out with this news. So the market is just in this weird predicament. And then on top of that, you have the new variant, this Omicron variant, which is kind of floating around, and now it's found its way to the United States. So overall, I think it's just too much going on, and a lot of investors and traders are pulling their money out of the market. Okay, but anyway, just back to the technicals. I wanted to give some fundamentals, some background news on the technicals and why is this playing out like this. But as you can see here on the weekly, we did flush through that 456 level that we were saying that if you were bullish, you would want that 456 level to hold going towards the end of the day. We did flush through that. As I said, my price target is still 440. What I do see going into next week, anytime you break through a major support level, there's always that bounce to get back up there and try to reattempt it. So as you see here, we broke through that support level. There was an attempt here and then another attempt here, and then finally worked his way through. I'm sorry, I got all my alerts going off. So there is that opportunity for a bounce intraday back up to this 456 level going into starting next week to try to recover the support level, which there will be rejection, and then the flush may continue down to 440. I did not lock in those puts I was telling you all about. I want to lock in. I was in a meeting this morning. And by the time I got done with that meeting right around 10:15 and was able to get on the computer, this flush had already begun, and I missed out on some inexpensive premiums. By the time I got to it, those premiums were already skyrocketing. So SPY's playing out exactly how we said. My price target is still 440. We may get a small bounce going into next week. And then the flush will possibly continue. So hopefully I kind of want this to hold up. So Monday, when we get another bounce, I can lock in some premiums at a fair price. FCEL played out exactly how we wanted it to. Remember I said on the daily we was right at the 150 SMA. We got some small buying, but then we would flush through it. And I was looking to possibly get out of my puts right around the lowest sevens to 675. Um, Again, I had another meeting later today. So when I came and checked the price. We were sitting right in here, and I was up by a decent amount, and I started seeing we were. Was that today? What's today? Am I looking at the? No, today was the third. So we were right in this area. Matter of fact, we was down at the low of this candlestick. So mid $7, right around the 750. I went ahead and cashed out because I wasn't gonna get much screen time being in the office, and then the price action continued downward. So I didn't stick with my target all the way through, which I should have. But just looking back at this, I left roughly about 9 grand on the table, not following this all the way down through. And I believe this will continue into next week, down to that lower 7 to 675 level. And if that doesn't hold, then we'll definitely get down to the low sixes, high five, high $5 level, to where I think this will stop bleeding out right around right around that time. Excuse me. Um, what I am looking at is my biggest thing, my play going into next week, is I really want to get deeply invested into the metaverse and have control of a lot of shares. So I'm looking at Facebook. I missed this initial move down. I do think we get a slight bounce going into next week, starting next week, which is what I'm hoping for. Um, so between the SPY and Facebook, I'm looking to lock in some puts all the way to the downside, and honestly, I'm looking to get down here to this, back down to these levels, where you can see the 150 SMA is trending upwards on the weekly. Well, I'm looking to get back down in these levels right around 250 to 270. Take those puts all the way down to this level, and then with the money we made from those puts, taking it back down to this level, I do look to go long and actually buy shares of Facebook for the long haul back up, as the metaverse begins to build itself up and gain some momentum over the next course of 5 to 10 years. So I am looking to take, it's no longer called Facebook, excuse me. I am looking to take Meta Platforms all the way down to the 150 SMA on the weekly, back down to that 245 level, um, and then take Facebook back long. But TTM trades, looking at the VIX. Again, the VIX is still very strong. A lot of volatility in the market. Again, VIX is creating higher highs, higher lows, higher highs. And again, you can see we're extended on this one. So I do think opening up next week, the VIX pulls back, which allows the SPY to breathe a little bit and attempt that 456 level starting next week. And then we see that rejection at 456. And then we finally get the flush down to 440. Now, we haven't felt this weekly's middle Bollinger Band since June of 2020. All right, we fell that weekly middle BB. Then this will put us back down here in that 425 range, which we haven't seen this range in almost a year and a half, going on 2 years. So if we fail this level next week, 440 next week, the weekly's middle BB, then if you're bullish in the market at all, I would probably just go cash and have my money on the sidelines, because if that happens, then that leaves us room to just continuously flush downwards, which I highly doubt will flush down here to this, to the weekly's 150 SMA on the S&P 500, because now we're looking at COVID type drops back from February 2020, when we flushed down here towards that 150 SMA. So 440 is in play. We're monitoring that, and the SPY and Meta Platforms, uh, used to be known as Facebook, are the plays for next week. Till next time, probably do a video this weekend as we open up the market going into next week. But till next time, TTM Trades. Hope you all made some money today. I'm out.